Hello and welcome to your September Investor Update. I'm Alex Matchett, investment writer here at Nutmeg. As we're continuing to work remotely, I'm joined via Zoom today by Brad Holland, our Director of Investment Strategy. Hi, Brad.
Hi, Alex.
Financial markets seem to be continuing to recover from the series of crises at the start of the year. Did we see more of that in August?
Pretty much, yes. World equities rose over 6% in August and are now back in positive territory year to date. It was actually the best August return in 30 years. It's worth mentioning too that the overall US market reached new highs in August. Actually, US NASDAQ technology stocks reached new highs way back in June. And so too Chinese and Taiwanese stock markets, each of which are heavyweight in technology companies. They broke new highs in July. So some major milestones are being achieved after that very rough patch in February, March.
It sounds like it's still a bit uneven. There are a lot of countries that you didn't mention there.
Yes, apart from the US, China and Taiwan, other markets are still under their high water marks. And that's really because the economic recovery has not significantly strengthened around the world. The clear global winners this year have been technology companies which have helped us all stay connected. But concern around COVID and likely further localized shutdowns is a major drag on confidence, consumption, and investment. The macroeconomic picture is starting to clear, but there's a long way to go. Government policy everywhere is doing whatever it takes to support growth, but it will take time for labour markets to bounce back.
Speaking of long waits, why are UK assets trailing behind so much? And when can we expect the UK to be back in favour with global investors?
Well, the UK economy has a large services and energy sector, and both have been among the hardest hit by COVID. But the UK is also heavily involved with global trade, and that was slow even before COVID took hold. So the UK has been hit on two fronts this year, which partly explains why UK stocks remain down around 18% on the year, while overall developed equities are up almost 6%. So the UK market will need more evidence of economic rebound before its market recovery matches the likes of China and the US. It's worth pointing out that the European markets are also still down over 10% year to date, and Japan down around 5%. But the UK is a real laggard, and no doubt uncertainties over Brexit are still important here. And on Brexit front, we are heading into a crunch time. The autumn session, if a deal is to be done, we should start to see the shape of it forming very soon. September the 7th kicks off the next round of negotiations, and the EU summit, October the 15th, is the key milestone. The European Parliament needs a fully formed agreement by the beginning of November if it is to be scrutinised and ratified by the end of the year.
Thanks, Brad. So you've talked there about COVID, lockdown measures and Brexit and how they've all taken their toll on the markets. And we also remember the oil price crisis back in February, March time. Is there anything else we should be looking out for?
Well, it might seem a technicality, but during August, the Federal Reserve, the US Federal Reserve, announced a major change in the way they fight inflation. That has implications for interest rates, bond yields, currencies, gold prices, frankly, every financial asset price. The nature of the change is that the Fed will now be more responsive to historical inflation rather than using preemptive policy based on official inflation forecasts. Under the new system, they will wait a lot longer after inflation rises before starting to raise short-term interest rates. And so for the time being, it means policy will remain easy for longer, and that is a good thing for risky assets. Elsewhere, Japan's Prime Minister Shinzo Abe has announced his retirement, and he is renowned for his transformative economic policies since 2012, so-called Abenomics. And some investors may be looking to see what happens next in Japan. However, the retirement does not currently look like a financial market event, as the unusually speedy succession process looks designed to ensure continuity of Abe's policies.
So there's certainly a lot going on in the markets. Against this backdrop, how did the Nutmeg fully managed portfolios perform during the month?
Well, higher risk portfolios, they rose by a bit over 5%, and mid-risk portfolios rose around 2.5%, and lower risk portfolios were basically flat.
Given everything that's happened lately, have you made any changes to Nutmeg's fully managed portfolios?
Yes, we slightly increased our equity allocation through UK small to middle-sized companies, although we do remain slightly underweight UK equities. And we also moved a small amount of UK gilts into US mortgage-backed securities. Traditional government bond markets continue to present poor value, and we look to add yield to portfolios where we can. We maintain a very small pound sterling underweight versus the US dollar on the risk of no deal with the EU in coming months.
Thanks, Brad. This month's customer question comes via our customer support team. We've been asked, I'm not far away from drawing down my pension, and I'm wondering if it's a good time to consolidate my pension pots in one place.
Well, I think any time is a good time to consolidate pension pots. Quite apart from the ease of access and transparency of your financial position, there could also be cost benefits if you consolidate into a low fee fund. A key consideration is how you plan to start drawing down. Will you take an annuity, or will you be taking a tax-free element and staying invested with the rest? Many people need to keep the value of their assets growing during retirement, so therefore they stay invested for quite a while. In this case, one central investment plan is a better idea than having smaller pots with potentially conflicting investments. Good asset diversification is easier to achieve with the one pot.
Thanks, Brad.
Thanks, Alex.
And thank you for joining us. If you have any questions for Brad or the investment team, or something you'd like answered in the next month's investor update, you can contact us via social media, email, or in the comments section below. We look forward to seeing you next month.